Welcome to the deep dive. Today we're tackling a really interesting one, D-Wave Quantum Inc.
Yeah, definitely a company that sparks a lot of debate.
Absolutely. Their stock price, I checked this morning, May 17th, 2025. It's sitting around $12.27. But, that number really has a roller coaster.
Oh, completely. You've got this real battle of narratives happening.
Exactly. On one hand, they're posting record revenue figures, which sounds great.
But then, bam, you get this short seller report calling their main technology quantum annealing, basically a commercial dead end.
Right. Carisdale Capital, wasn't
Yeah.
it? And then you've got legal investigations popping up, too. It's a lot to unpack.
It really is. It's kind of the poster child for high-risk, high-reward tech, isn't it?
Yeah.
You have this potentially groundbreaking innovation, big financial news, but serious public questions about whether the core idea even works commercially.
Yeah, fascinating and frankly pretty confusing if you're just trying to get a handle on it. So that's our goal today. We've gone through, well, a pile of stuff investment reports from today, news, company filings, the Carisdale report itself.
Trying to cut through the noise.
Exactly. We want you, our listener, to come away with a solid grasp of D-Wave's business, these big controversies, what you need to think about, without needing a PhD in quantum physics.
Just the essential nuggets.
That's the plan, extracting the key takeaways.
Okay, so setting the scene. D-Wave, they've been around for a while, positioning themselves as pioneers in commercial quantum annealing.
Right, that's their main thing historically.
Yeah. Their business involves selling the actual quantum systems, offering cloud access, that's their LEAP platform, and providing professional services to help companies figure out how to use this stuff.
And now they're also dipping their toes into gate model computing.
That's the newer strategic move, yes. Adds another layer of complexity and, well, controversy to their story.
Okay, let's dive into Chapter 1, Business Understanding. How are they actually making money? What's the model?
Well, it's got a few parts. First, hardware sales. And this is really important for the recent numbers. That record Q1 2025 revenue, $15 million.
Yeah, huge jump.
Almost all of it, $12.2 million, came from selling one big system to the Jülich Supercomputing Center in Germany.
Wow. Okay, so one big sale really moved the needle. That sounds lumpy.
Exactly the word, lumpy. It makes their revenue unpredictable quarter to quarter.
Right. So what else besides these big hardware deals?
But then there's QCS Quantum Computing as a service. That's the LEAP platform. Companies pay to access D-Wave's quantum computers over the cloud.
Ah, so you don't have to buy the multi-million-dollar machine yourself?
Precisely. LEAP includes their Ocean SDK, which is Python-based, so developers can use it more easily. It's got tools, learning stuff, and crucially, SOC2 Type 2 compliance.
Which is important for security, for big companies.
Very important for enterprise adoption. And LEAP uses hybrid solvers too.
Hybrid, meaning?
Meaning it combines quantum processing with traditional classical computers to tackle really big problems. It's not purely quantum for everything.
Okay, a practical approach then. What else?
They also have professional services, basically consulting, helping clients find ways to use quantum, building applications, and some revenue from software licensing.
Got it. So a mix. But that Q1 hardware sale dependency really stands out, doesn't it? For stability, they need more from the cloud and software side.
Absolutely. That recurring revenue from QCS and software needs to become a much bigger, more consistent piece of the pie if they want smoother sailing financially.
Makes sense. Now, the tech itself, these advantage systems, over 5,000 qubits. That's a lot, right? At least in the annealing world.
It is a high number for annealers, yeah. That's their current main system. And they're working on the next generation, Advantage 2. Prototypes exist. Early access is happening.
And LEAP provides access to these?
Yep. Remote access to the annealers, including those hybrid capabilities. And the Ocean SDK is the software key to unlock it for developers using Python.
Okay. And this other path, the gate model systems. Why the shift or addition? And what's the controversy Carisdale brought up?
Well, the wider quantum industry is mostly focused on gate model quantum computers. They're seen as potentially more versatile for different kinds of algorithms. So D-Wave moving into this space is arguably necessary to stay relevant long-term.
Kind of hedging their bets, maybe?
You could see it that way. But Carisdale slammed this move. They called it reactionary and stalled, basically saying D-Wave is late to the party and isn't making real progress.
Ouch. So questioning if they can actually compete beyond their annealing niche.
Exactly. It's a direct challenge to their future strategy.
Right. Which brings us nicely to Chapter 2, Management. Who's running the show?
The CEO is Dr. Alan Baratz. He's got a tech background. Notably, he was president of JavaSoft at Sun Microsystems back in the day.
Ah, the Java connection, scaling a platform technology.
That's the experience D-Wave highlights, yeah.
Yeah.
Potentially very relevant. Then you have John Markovich as CFO, lots of finance and M&A experience, and Lorenzo Martinelli as Chief Revenue Officer, focused on cloud software sales.
And the board.
Diverse backgrounds. Seems standard. They have governance guidelines like majority independent directors, diversity policy, stock ownership rules for directors. Ticks the usual boxes.
Okay, so the Java scaling experience for Baratz sounds potentially useful, doesn't it, for commercializing something complex like quantum?
It certainly could be, yeah. Building an ecosystem, getting developers on board, that's a similar challenge.
Yeah.
The leadership team looks credible on paper.
I sense a but coming. You mentioned some concerning financial signals earlier.
Yes. Despite the experienced team, those Q1 numbers, when you look past the headline revenue, well, they raise questions. That huge reliance on the one sale is one thing.
Right, the lumpiness.
But maybe more worrying was the sharp drop in bookings. Bookings are basically new contracts signed, indicating future revenue.
How bad was the drop?
In Q1 2025, bookings were only $1.6 million. That's down 64% from $4.5 million in Q1 of the previous year.
Oof. 64% down. After a record revenue quarter. That doesn't sound good.
It's a significant disconnect, isn't it? Record revenue now, but a potential pipeline drying up.
Yeah.
It definitely suggests caution about future growth. It needs close watching.
Absolutely. Okay, that's a perfect lead into Chapter 3, financial health. Let's really dig into the number.
Right, the revenue story is dramatic.
Yeah.
Q1 2025, $15 million, up 509% year over year. Amazing.
Yeah, it's amazing.
But then you look at the full year 2024 revenue, it was only $8.8 million. So that one quarter was way bigger than the entire previous year's revenue.
Driven by that one sale.
Exactly.
Yeah.
And while FY 2024 bookings were strong, up 128% to $23.9 million, you then hit that Q1 2025 bookings cliff we just talked about. So a very mixed picture.
Okay, revenue is volatile. What about profit? Are they making money on these sales?
Well, in Q1 2025, they did report a record GAAP gross profit of $13.9 million. That's a 92.5% gross margin.
Which is incredibly high, also thanks to the hardware sale.
Likely, yes. Hardware sales often have better margins than services. Compare that to FY 2024, where gross profit was $5.6 million on a 63% margin. Still decent, but not 92%.
And operating expenses, are they going up?
They did increase in Q1, yeah. Now, the bottom line, net loss. They actually improved it in Q1 2025, narrowing the loss to $5.4 million.
Better than the year before, then?
Yes. But for the full year 2024, the net loss was huge, $143.9 million. So one quarter's improvement is nice, but the history is deep red ink.
And profitability overall, when do analysts expect that?
Adjusted EBITDA loss has improved, but yeah, profitability is still a ways off. Most analyses suggest it's not likely within the next, say, 3 years. Could be longer.
Okay, so burning cash still. How's their cash flow looking?
Negative. Operating cash flow in Q1 2025 was negative $19.3 million.
Yeah.
Free cash flow, significantly negative too. They're definitely spending more than they bring in from operations.
But they raise money, right? You mentioned an ATM program.
Yes, a big one. They raised $146.2 million selling new shares into the market during Q1.
Okay, that shores up the bank account. How does the balance sheet look overall after that raise?
Pretty strong, actually, in the short term. As of March 31st, they reported a record cash balance of $304.3 million.
That's a lot of cash.
It is. Management says it's enough to fund them to profitability. We'll see. Total debt is around $55 million. Stockholders' equity improved. Short-term liquidity looks okay on paper.
So plenty of cash for now. What about the key ratios? What do they tell us about the underlying value or lack thereof?
Right, this is important. Return on invested capital, ROIC, consistently negative, and well below their cost of capital, the WACC.
Meaning they're essentially destroying value with the capital they invest from a financial perspective.
From that specific metric, yes. It means the investments aren't generating enough return to cover their cost. Price to earnings, PE ratio, negative, of course, because they're losing money.
Expected. What about price to sales?
This one is wild. It's incredibly high. Around 167 times their sales.
167 times. That's astronomical.
It is. It signals that the current stock price isn't based on current performance at all. It's purely built on massive expectations for future growth. Huge speculation baked in.
Okay, that gives us a really solid financial picture, albeit a concerning one in some ways. We've covered the business, management, and financials. Let's take a quick pause. When we come back, we'll look at the market, competitors, ownership, and crucially, those risks, including the Carsdale report. Stay with us.
Welcome back to the deep dive, focusing on D-Wave Quantum. Before the break, we covered the business, management, and financials. Now let's move to Chapter 4, Market Sentiment. What's the vibe in the quantum tech market overall?
It's definitely a hot space, growing fast. Projections for 2025 put the market around $1.88 billion.
And quantum computing is the biggest piece of that.
Yeah, it's the dominant segment, and that cloud model, like D-Wave's Leap, is expected to be a big driver for making it more accessible.
But it's not all smooth sailing, right?
Really?
And using challenges. Oh, absolutely. It's still very early days tech-wise. Lots of different approaches, superconducting, trapped ions, photonics, annealing like D-Wave, and they all face big hurdles.
Like what?
Things like keeping the quantum state's stable coherence, scaling up the number of good quality qubits, fixing errors, which quantum systems are prone to, and just the sheer cost of building and running these things.
So huge potential, but still a lot of fundamental R&D needed across the board. Who are D-Wave's main competitors in this race?
They're up against some giants, IBM, Google, Microsoft. They all have big quantum programs and deep pockets.
The usual suspects in big tech.
Right. And then you have specialized players like Rigetti, IonQ, others focusing on different quantum techniques. It's a crowded field.
So how does D-Wave try to stand out? What's their pitch?
They often talk about being the first mover, getting commercial annealers out there early. They emphasize practical applications, especially optimization problems, using that quantum realized tagline.
Focusing on what you can supposedly do now with annealing?
Kind of. And they also point to their dual strategy, sticking with annealing but also developing gate model.
But again, Carsdale basically called annealing a dead end, a niche offshoot.
Exactly. That's the counter-narrative.
Hmm.
Is annealing truly useful long-term or just a stepping stone, maybe even a dead end, compared to gate model? That's a core debate.
What about barriers to entry? Is it hard to get into this game?
Extremely hard. You need massive capital for R&D and building machines. There's a huge shortage of people with the right skills. Quantum physicists, engineers.
Talent war?
Big time. And that might hit a smaller company like D-Wave harder than, say, Google. The tech is just incredibly complex. And the patent landscape is a minefield, too.
And regulations. Anything specific to worry about there?
Well, it's evolving. Data security is a big one, especially with quantum computers potentially breaking current encryption. Hence, the push for post-quantum cryptography.
Right, the security implications.
Then there's IP rights, competition rules, foreign investment scrutiny. We saw the UK flag quantum as sensitive. For D-Wave, being Canadian, potential U.S. tariffs are always a background risk, even if paused now. Could raise costs, mess with supply chains.
So geopolitical factors, too. Is money still flowing into the sector despite the challenges?
Oh, yeah. Lots of VC money pouring into quantum startups, and governments worldwide are investing heavily, too, through national initiatives.
Okay, let's shift to Chapter 5, ownership. Who actually owns D-Wave stock?
The numbers vary a bit depending on the source, but institutional ownership seems to be somewhere between, say, 10% and maybe 35%. Big names like BlackRock and Vanguard are often listed.
And insiders, management and early investors.
Again, figures vary, maybe 1.6% up to around 13%.
Any interesting moves by insiders lately? Buying or selling?
Yes, a couple of notable ones.
Mm-hmm.
The CEO, Alan Baraks, reportedly bought some shares in May 2025.
Which usually looks like a sign of confidence.
It's often interpreted that way, yes. But on the other side, a major early investor, PSP Investments, significantly cut their stake back in January 2025.
Ah, before the Carsdale report hit.
That's right. So you have the CEO buying recently, but a big, knowledgeable insider selling substantially a few months earlier. Kind of sends mixed signals, doesn't it?
It definitely does. Food for thought. Okay, now for the really critical part for any potential investor. Chapter 6, Risk Assessment. Sounds like there's a fair bit to cover here.
Absolutely. This is where the rubber meets the road. We can think about it in terms of strengths, weaknesses, opportunities, threats of SWOT. But let's focus on the risks, the headwinds.
Okay, what are the big ones? Technology first.
Yeah, number one is the fundamental question about quantum annealing itself. Is it truly viable long-term, or is Carsdale right calling it a commercial dead end? That's a huge risk.
The core product risk.
Exactly. Then there's the execution risk on their gate model pivot. Can they actually deliver on that, given the criticism that it's reactionary and stalled? Plus, the general quantum challenges, scalability, error correction. Can D-Wave solve these with their resources compared to the giants? R&D outcomes are uncertain.
Okay, tech risks are significant. What about market and competition?
Intense competition, as we said.
Yeah.
And the market is still very early. Adoption timelines are really uncertain. Will customers actually start using this at scale anytime soon? There's a risk D-Wave runs out of steam or cash before the market truly materializes.
And the financial vulnerabilities, we touched on these.
Yeah, history of big losses. Profitability is still uncertain and depends heavily on hitting those growth targets. They burn through cash quickly.
Meaning more share sales, potentially diluting existing shareholders?
That's always a risk when you're not profitable and burning cash, yes. And they do have existing debt to service.
Now, the Kerrisdale report itself. Let's unpack their main accusations again.
Okay, Kerrisdale came out swinging in April 2025. They alleged annealing is a dead end. They said D-Wave's hybrid solutions are misleading, mostly classical. They claim the gate model effort is stalled.
Also questioned their quantum supremacy claims.
Yes, called those misleading. They pointed at stagnating customer growth and ultimately said the valuation was ridiculous. Pretty damning stuff.
And D-Wave's response.
Well, based on the sources we looked at, there hasn't been a point-by-point public rebuttal addressing all the specific claims in detail. That lack of a detailed defense is notable.
And the legal investigations followed.
Yes, investigations were launched looking into potential securities fraud based on these kinds of allegations. That definitely hurts trust, both with investors and potentially customers.
Okay, anything else? Macro risks.
Just briefly, those potential U.S. tariffs on Canadian goods we mentioned, even the threat can cause uncertainty, impact costs for parts, maybe trigger retaliation from Canada, adds another layer of external risk.
Wow. Okay, that's a heavy dose of risk. Let's try to wrap this up. Chapter 7. Conclusion. What's the bottom line here for someone trying to understand D-Wave?
It's just a really conflicted picture, isn't it? You have some genuine positive momentum, that big Q1 revenue number, the healthy cash balance after the equity raise. That looks good on the surface.
Underneath.
Underneath, you have huge risks and uncertainties. Doubts about the core technology's future, fierce competition, a long history of losses. Very serious allegations from Kerrisdale that haven't been fully refuted publicly, legal clouds, and a stock valuation that seems priced for perfection, not for this level of risk.
So, from a purely value investing perspective, what does this look like?
Highly speculative, extremely high risk. If you're looking for an understandable business with a clear competitive advantage or moat, this isn't it right now.
Questions about management transparency, maybe, given the lack of rebuttal?
You could certainly argue that. And the valuation. There's absolutely no margin of safety at these levels based on current fundamentals. Trying to calculate a reliable intrinsic value is basically impossible with so many unknowns.
So the strict value investing call would be...
Avoid or sell if you hold it based on value principles. It just doesn't meet the criteria for understandability, moat, management clarity, or margin of safety.
Okay, so that leaves us with a big question, doesn't it? We've laid out the bull case fragments and the very significant bear case. Here's what we want you, the listener, to chew on.
Given everything, the conflicting stories, the fast-moving quantum field, is D-Wave, this amazing disruptor, about to hit its stride? Or are they more like a pioneer who showed the way but might get overtaken by a bigger technological shift?
Yeah, what factors, what tipping points will decide if they succeed or fail in this incredibly high-stakes quantum race?
It's the multi-billion-dollar question, really.
Yeah.
We definitely encourage you to look at the sources we use. They're all linked in the description and form your own conclusions.
Absolutely. And if you appreciated this deep dive and want more analysis like it, breaking down complex companies and market trends, please subscribe to the Stock Analytics AI YouTube channel.
And just a final important reminder, this discussion is based on information available as of today, May 17th, 2025. It involves interpreting complex stuff that's changing fast.
Right. This is for informational purposes only. It is definitely not financial advice. Please do your own extensive research. Talk to a qualified financial advisor before making any investment decisions.
And we should also note that AI tools assisted us in synthesizing and analyzing the large amount of information covered in this deep dive.